You're listening to the Money Monopolizers podcast, helping you take control of your financial destiny. It's about time that we invest more in our financial literacy and work towards building generational wealth. If you think you're ready to do the same, then you've come to the right place. Alex, Marlon, y'all ready? Let's get this bread.
What's good, everybody? It's Alex Comunio, and we are back with episode 56 of the Money Monopolizers podcast, and I'm here with my co-host, Marlon Walls. Marlon, how you doing today, bro?
I'm doing excellent, bro. Like, this week has probably been one of the best ones I've had in 2020 overall. We sold two properties. Well, for me, I sold my house, the house hack back in Indiana. That one's officially gone now. We delayed closing by like 2 weeks, but now it's officially gone. So my whole focus now is trying to find another one. And I actually offered on another one earlier this week. Still got denied. Offered full price without seeing it, and somebody else has still offered over asking. This in 2020 hindsight, it's probably not that bad because that one had some foundational issues on the back house, but it was pretty nice overall though. So, but it's a struggle, bro. I ain't gonna lie. Like, trying to find the right one, it's few and far between, especially at a decent price that's not gonna destroy me, but. It's been something, but then on top of that, I know we saw the flip over in San Antonio, so I know you can talk about that. But yeah, it's been a good week overall.
No, that's good. That's good. Yeah, they're gonna have to go on this journey with you. Your boy been talking about this house every week that he can't get.
Yeah,
but it'll happen. It's just welcome to real estate.
Yeah.
But yeah, we did sell this other flip out here in San Antonio, so. That was a good one. Cleared about $50K gross profit on that. So it ended up being pretty good deal. Best deal actually that we've done so far. So that one is gonna, help put or help, move us closer to that next investment, which is gonna hopefully be, or the next big investment will hopefully be an apartment complex. Hopefully soon in the next year or so. Probably hopefully sometime next year. But yeah, that one was good. Got another one that's still going on. Hopefully that will get wrapped up this week. And we can put that on the market and sell that. That should even honestly be a bigger profit than this $50K because it's right down the street, same floor plan, same ARV, of course, so it should be relatively close sell price. And we got it for about $10K cheaper. Mm-hmm. So it should be, rehab was even pretty similar. So it should be a better profit. Hopefully it's around $50,000 to $60,000 gross. So, those are the deals that I like. Keep them coming. So hopefully we get one more of those this year. Finally figured out a strategy that I like in terms of investing and flipping out here in San Antonio and where I like to buy, the type of neighborhoods I like to buy, everything, the spreads and all of that. Finally figured that out. So, getting in the groove of that. That being said, if you're hearing this, then my course, How to Acquire Your First Flip or Rental Property, or even your next, releases tomorrow. Today's the last day of the pre-sale with the discount. So tomorrow it will be going to full price. So get it today. Pretty much detailing you everything that you would need to know to get this first deal. I promise there's nothing that I left out. Literally anything that was in my brain got put into that course. So, it's over 10 hours of content. Let me tell you, that was a beat to put together, bro. That was a lot of work. And I still got some more to do. And then I got to finish editing it. You think editing a podcast is crazy. Imagine editing 10 hours of freaking course. But, I put in a ton of effort into this. Already, I wish this was releasing earlier. I wish I'd have said this last week, but I didn't. But yeah, it is on pre-sale right now, so you can go get it. It's on Gumroad. Definitely go get it. It's the link on my bio. I'm gonna put it in the description here as well. Like I said, A to Z, everything you need to know about getting your first rental property. Literally, we're talking about everything from mindset, investing in yourself, putting your plan together in terms of like your goals, whether you should flip or hold. Talking about what type of property you should buy. I'm literally going through everything right now. Talking about what type of property you should buy, talking about choosing your market, your location criteria, talking about putting your team together, who needs to be on that team. We're talking about financing the deal, how you can finance the deal, how you can get deals with no money down. We're talking about how to raise private capital, the strategies I've used to raise over $150,000 of private capital and counting. And we're talking about analyzing good deals versus bad deals, what a good deal or bad deal looks like. We're talking about estimating rehab costs, how to make sure you're doing that correctly. We're talking about figuring out, everything, how to analyze rental property deals, flip deals. We're talking about determining income and expenses. We're talking about everything you need to know, all the mistakes I made that caused me to lose $30,000 on a deal. We talking about even closing and offering on a property, everything A to Z. I'm telling you, we not leaving nothing out in regards to getting that first property. So it's on Gumroad. Go to hit the link in the bios on Instagram, or actually just scroll down. It's link in this description right now. You can check that out and you can get the course here. So definitely go check that out. Great thing that you have. I think I didn't even cover everything. I just covered the main topics, but I didn't cover everything. So a ton of value in there. Go check it out. I don't want no more questions in my DMs. Mm-hmm. We ain't doing no more of that. I answered free questions for a long time. Ain't no more of that. So if you want to get into real estate, then
definitely go get the course. That's the hashtag. Get the course. Hey, no more questions in my DMs. But just a comment on all that. Like, if y'all have seen just the screenshots of what this dude put together, it's out of this world. Like, this is a whole Monopoly board, bro. And you got each individual step that he just named is his own little step that you would go on to on the Monopoly board. So lots of time, lots of hours went into putting that together. I already know. So it's like, bro, this is every question that y'all could have ever asked is going to be in this course. So definitely go check it out, bro. And I know you talked about like raising the private money. Like, I just want to extend it out again, because if y'all have seen the profit that we just made on the last deal, understand that we have financed that fully with private money. That means the people that have listened to the podcast were pretty much put up some money for us to go invest, get the property, flip it, and everything was fully financed through these private money lenders. Then we pay them an interest, and then they get their full investment back on top of that, and then we take the rest of it as profit. And that's a win-win for everybody. So, like, honestly, y'all can do the exact same thing if y'all listen to this right now. If y'all have money that y'all want to invest with us, like, definitely like hit us up either in our DMs on Money Monopolizers, or y'all can go to our website and check us out in the contact page. You can also like just mention that y'all want to be investors with us, and we'll definitely hit you back up. So just want to extend that invitation too.
Nah, definitely got to plug that. And that just last thing I want to comment on that, because this is getting a little longer. That deal, I'll just be keeping 100 with y'all. She lended $115,000, and she made, I'm not gonna say how much you mean, but we did pay her 10% annualized on that deal, and that was none of our own money that we had to put up. So that's kind of how we fund those. I'm teaching that in the course, how you do that as well, and the strategies I use to do that. So that's what you're getting out of that course. So it's definitely a ton of value. But yeah, there's so many things that we could, we've done real estate episodes, we've done everything, but that course is going to be a lot more in depth and tell you a lot more that you need to know. So definitely go check that out. But yes, man, that was a long-winded, but I had to plug that because of course I'm trying to get them sailed now. I'm playing. I mean, I am, but also because it's a lot of value. So I'll definitely go check that out. But yeah, let's get into this episode that we had. Was that everything? Yeah, let's get into this episode.
Yep.
Yeah. Let's get into this episode that we had today. So today we talked to Zay, a friend of the show, one of the homies. We interviewed him back in March, even before Corona. So that was ages ago in 2020 years or 2020 hours, because we know 1 month in 2020 is a very long time. But yeah, it was a great episode. We talked to him. This was our first stock investing episode that we actually did. And like I said, I know we get people that talk to us like, "Yo, when we gonna get a stock episode?" Well, here it is. We got you. We wanted to make sure we got a good guest on here. We don't necessarily talk too much about stocks because, like I said, we are real estate. I mean, just plugged, an hour of real estate course. So we are real estate focused. That is our bread and butter. That's what we always going to be primarily focused on. But, it's definitely good to diversify. And, that's what we're going to start doing as well in terms of our asset portfolio. So, but yeah, he provided a ton of value in here. And, there was just so much that we got to talk about in terms of like how to actually get started in stock investing and what it is and everything. But yeah, what did you think about it?
It's one of my favorite episodes. I mean, I'm gonna sound like a broken record eventually, but this dude is like really just cool to talk to overall because honestly, like everything is just makes things sound very simple. Like I'm glad he kept it to like an elementary level because it was able to at least shed some light on things that are not often talked about. Just when it comes to stock investing, like we went through pretty much everything that you would need in order to get started with stock investing, talking about the different types of traders out there, different types of position holders actually, and just understanding the basis of what it means to own a stock and why it's good for like building generational wealth. So I think it was very fundamental, and I think there should be a lot of value in here for people to take heed to.
Yeah, definitely. There was a ton of value. If you've been wanting to get into stocks, then this is a great episode for you to listen to, a good fundamental episode for you to start on. Like I said, I know a lot of people ask us, but we like to bring people on here that do things better than us if we're going to talk about it. So, like I said, when we talk about paying down debt, we bring people on here that do that because we haven't done that. We talk about stocks, we want to bring people on here that do that. But yeah, anyways, this is a great episode, so let's get right into it. What's good, Zay? How you doing today?
What's good, fellas, man? Appreciate y'all having me on, man. Looking forward to this one.
Yeah, for sure, man. We're happy to have you back. This is a esteemed guest of the show. If y'all haven't already listened to one of our better episodes, episode 33, it was a longer one. I think it was, when did we record that? That was back in like April?
It was, no, actually March 5th. I listened to it earlier, man. This is like, that was pre-corona time when we had you on. Yeah, that's like one of the last ones before everything started shutting down too.
Yeah, I was about to say it was definitely pre-corona because I think I went on vacation the week after.
Right. You did. I remember. Yeah. I remember y'all talking about you was going to Vegas.
Yes, and that was literally when I got back. That's when the shutdown happened, bro.
Yep.
Yeah.
Crazy.
and then I remember your wife, Ellie. She said she was going on a trip in August to Ohio or something.
That was bad.
We were supposed to go to FinCon too.
She was supposed to go. Yeah, she was supposed to go to Vegas for like a bachelorette or something like that. But Corona shut that down.
But yeah, I definitely. It was a lot that happened. That was 6 months ago, so a lot has definitely changed in the last 6 months. 2020, man, a lot could change in a month. So it's been. I know we were kind of talking before, and we kind of mentioned how you kind of mentioned how the whole quarantine and everything has been a good time for y'all too. And so I'm really happy to hear that. But we are super excited to kind of get into this episode because we haven't necessarily done a stock investing episode per se, because for all our listeners, obviously people that have been listening to us, rocking with us for the last 50 plus episodes, they know that we're pretty like real estate focused, right? So we're pretty heavy into real estate investments. We obviously do stock investing, do the options and stuff like that, but our primary focus is real estate. So I'm a big believer in the fact that we always want to bring people on here that are doing things better than us if we're going to talk about something. So whenever we come on, we bring people on here, they're talking about debt or whatever the case may be, people that paid off debt, and we want to bring those people that do that. And so now we definitely want to bring someone that we know is in the stock game and doing well in the stock game. So super excited to have you on the show and get to I think this will be a super educational and informative episode because I really want people to get the basis of kind of what stock investing is and how they should go about it.
Oh yeah, definitely. I appreciate it, man. Like I said, it's going to be fun. And it's definitely going to be foundational, like you said. So let's get into it, man. I'm looking forward. What's the first thing we're going to talk to the people? What we got on the agenda?
Yeah, for sure. So, I mean, first thing I do want to just set the disclaimer before we get into it.
Yes, go ahead. Please do that.
We are not financial advisors or investment advisors. We don't do none of that. This is strictly our opinion. So, I said it. I ain't gonna say it again.
Right. This is for information and educational purposes only.
Not legal advice.
But
so yeah.
That's the way.
yeah. But yeah, I really just wanted to really start with the basics. We're gonna get into some more of the advanced stuff throughout the episode. But just starting off, what is stock investing, and how can people use that to make themselves wealthy?
So, stock market investing is basically making your money work for you. We're going to keep it real simple. And so let's start with, what is a stock? A stock just gives you partial ownership in a business. That's it. So when you buy one share of Apple, you can consider yourself an owner of Apple. And because you own this share, as Apple does well and the price appreciates, your money appreciates, or that value in that stock appreciates. And so that's all stock market is investing is. You can buy an index like the S&P 500, and that's you. Like when people say investing in the stock market, you can basically invest in what's called the S&P 500, and that's like the main index that is used to track the stock market. Now there's other ones, and we'll get into that later, but just for like just keeping it simple and plain for somebody that's brand new and just trying to get into the game and learn, that's all stock market is. Stock market investing is, to keep it simple. You making your money work for you because you're invested in assets or valuable in businesses that hopefully over time that money will appreciate, and that's how you're going to build wealth.
Yep. Yeah, I want to say just one thing I'm already hearing you say a lot is ownership, and that's one thing that we don't even hear. Like, that's one thing that's not preached enough in like our Black communities growing up, because you will see everybody trying to drive around in a Rolls Royce or some like any type of nice car, or everybody has an iPhone, everybody is wearing Nikes, but nobody really owns any of it. Like you have a product, you're a consumer, but you don't have any piece of ownership in the company, and that's just, and so if they're going up in value, you're not getting any part of that. You just have the products that they produce, and you just being on the consuming end of it. There's two ends of the register. There's a consumer, and there's a producer. You can be making gains based off of what they're doing as a producer of it, and that's what ownership is within the stock. And so I want to get into a little bit more of like how do you go about purchasing a stock? Like, how does that work for you? Like, how do you buy ownership of this company?
So all right, so let's talk about technically what's called being an investor, right? So if you buy a stock, they call you an investor. So what I want people to know is that when people say, okay, I'm an investor in the stock market, they think you have to go out, and buy all these fancy stocks and all that stuff. Let me just tell you, if you're investing in your 401k, if like you got a job or your 407, 457, 403b, you are an investor. Like that's step one. That's where you go first get your taste of investing in the stock market, by contributing to whatever your sponsor employer plan is. And you're going to have a bunch of mutual funds or index funds that's going to give you exposure. So people need to like go look in, where's your money going, right? So that's like right where you need to start right there. Like that's basic number one. For people who got that down and really want to learn how to open a brokerage account, I think it's two ways you can go. You can open a traditional brokerage. That's going to be your E-Trade, Fidelity, Vanguard, TD Ameritrade, right? Or you have our apps, right? So you got your Robinhood, you got your Webull. I'm gonna shout out two new apps that I want people to check out. One is called Public. It's like Twitter mixed with Robinhood, so it's pretty dope. And then you have Doe, which is like a financial literacy investing app, and it's Black owned, so I gotta shout them out. So we definitely need to be supporting that app, and it's super dope because it gives you, all the info on all the companies. You can trade options on there. You can buy stocks. So those are the ways you can go about purchasing stocks. So when you set up the brokerage account, it's just like opening a bank account. You do have to enter your social security number because you invest in. So you got to report that at the end of the year. Some people will be like, oh man, they want my social security number. Like, yo, if you make money, you got to pay taxes. So they are going to ask you for your information. And it's really simple. You just put it in, then you link your bank account, and then you'll transfer the money over. And then we can get into talking about like how to go about buying an actual stock or ETF or whatever. But that's basically how you go about starting a brokerage account or getting in the game.
Yeah. And I love that too, because, like I kind of mentioned, so throughout this episode, I know I'm probably going to make a bunch of analogies towards real estate in the sense of, because that's what we do. And just right off the bat, I know you talking about stocks and all of those things, there's a lot of similarities between that and real estate. But I think one of the, things about stocks is that it because you're buying into a company on like a public, like just a basis, and you're using like a brokerage, it makes it a lot more liquid. It's a lot more liquid than real estate, right? So it's a lot easier to get into and out of stocks than it is to get into and out of property, right? Of course, the process is going to be a lot harder. I think the barrier to entry could be is going to be a lot lower for a lot of people, right? A share of a company that has, a $1 billion or $1 trillion market cap with, millions of shares out there. It's really easy to get into a share of even Apple right now, especially after, they just split and all that.
Right.
would talk about. And I think too, just like you mentioned already, indexes, right? So it's really easy to diversify within stocks as opposed to within real estate. It might be a little harder to diversify within real estate because obviously you have to be, buying different class of properties, or you could, you could talk about REITs and all of that kind of stuff, but that's another thing. But I think too, I know you mentioned earlier, because I had asked, how stocks can make people wealthy, and you had talked about how they typically increase in value, right? So as far as that whole, appreciation thing within stocks, is that like, because I know, of course, there's like dividends, appreciation, and you get the tax benefits, of course, of owning stocks and those kind of things. But is typically the appreciation that's like how most people become millionaires with owning stocks, correct?
Yep, that's what it is. And really, I'm gonna tell you what it is. It's the power of compound interest.
Yeah.
Like that's what the stock market provides. So when you put some money to work and you let it sit for 30, 40 years and it's compounding on average 10%, and you add to it every year, you hit a point where your interest is compound so much that it's making 10 times more than what you contributed.
Yeah.
Because you let it ride. And you know what's crazy is yesterday I was talking to my father-in-law, and he was telling me, because I was telling him about our plans of how long we plan to invest. And I'm like, yeah, we got 30 years. He's like, no, you don't. You got like 40, 50 years. What are you talking about? You have to understand, with what's going on in the world today, you're going to live till you're about 90, maybe 100. So you need to think about when you're 60, you still going to live another 40 years, maybe. I was like, whoa, like that changed my whole perspective. I said, hold up. Okay, so now I got a 40 to 50 year horizon in the stock market. And we just do simple numbers. We all know that, like, if I had a compound calculator on me right now, we could go through the numbers where if you have something like that compound for 50 years, you do a simple amount of $250 a month or something like that. I guarantee you that's over $2-3 million. Easy.
Mm-hmm.
And so that's what the stock market provides. And it's just that it's the power of compound interest. Like Albert Einstein said, it's the eighth wonder of the world. You know what I'm saying? Those who know how to use it will amass a amount of wealth. Those who pay it, you're gonna be broke.
100%, and it's really that.
Real talk. That's how I go.
Yeah.
Sure. Boy got a big jug of water. I just saw that. But no, I want to go back because I know one thing that we always hear about when we get into the workforce is about the 401k. You may even hear about it like a Roth IRA or 401k IRA or whatever. Yeah. But like people will hear about it, but they never really even know what they're even investing in, and they solely rely on this for their retirement. And like you just mentioned that at age 65, you may have another 35, 40 years, however many years to live. So is this a sound investment strategy, especially if you're going in blind, just relying solely on your employer to pick the right stock for you or to pick the right investment for you to be able to live off of?
No. I'm gonna answer that straight. No. I mean, even if you have to go out and find an advisor, and if you're going to find an advisor, I would say find somebody that's a fiduciary, which basically means that they get paid a flat fee and they don't have an incentive to try to sell you on anything because they're going to get the same amount regardless of what they recommend. So they're more inclined to have your best interest at heart, whereas like somebody that works off commission, they're going to try to push life insurance and long-term disability insurance. They're going to try to push products on you, right? So I would definitely say try to get an advisor. But if you go and get an advisor, cool. But what I really want you to do is just educate yourself, right? Because it's really simple. I mean, if you read a couple books, investing is not hard, especially and we talked about index funds and stuff like that. So, I mean, really what you can do is go to your HR person at your job and say, hey, look, what are my options? What can I invest in? And have them break it down. They should break it down. Or if they can't, they have to bring somebody in that can do it for you. Or, they'll have to call or set up an appointment with whoever your 401k is through. And then they'll break it down to you and say, okay, here's your options. And then what you really want to say is, look, I just want to invest in the S&P index. And, make sure they directing your money there because they might put you in a mutual fund and you paying 1-2% in fees. Fees will eat you alive. And that's what most people don't understand when it comes to investing in the 401ks and these mutual funds. Those fees will, they will eat you alive. Think about 1% compounding over 30 years. It takes away 60% of the wealth you've amassed. That's crazy.
Yeah.
So what you need to do is get you an index where the expense fee is 0.04, 0.05 or something like that. And now you done saved yourself 400 or 500K over the long run.
Yeah.
And that's one move people can do that can change and impact their wealth building strategy through their 401k.
Yeah. And I love, that just, okay, because I'll preface this. I am not a fan of the 401k at all, right? So personally, anyone that has heard me since, we've been rocking with us since episode 1, you listen to episode 8, then I don't believe in the 401k personally. Like, of course, there's benefits to it. Like, there's pros and cons to everything. But for me personally, and for what I preach, in regards to like my goals and everything, I don't like the fact that I'm just so far removed from my investment decisions, right? Because in that regard, I feel like I'm letting someone invest on my behalf, and they're 4 or 5, even 2, 3, 4, 5, 6 degrees removed away from me. So and then on top of that, of course, the fees that they're collecting is eating into everything. So for me personally, I always tell people, and this is just with investing, regardless, people always ask me, hey, what should I invest in? Not even in regards to stocks, just in general. What should I invest in regards to whatever, even real estate? And I always say that you need to have a plan when you're investing, right? And to me, the 401k doesn't necessarily, I mean, you can call it a plan. If that's your plan, then that's your plan. Your plan is to retire when you're 65, 70 years old. That's, hey, good luck. That's what you want to do. That's what you want to do. But if you want to do something differently, then I say you need to have a plan, right, before you begin investing, right? So I know when we talk about like real estate, right, and we always say, whenever you start investing, you need to figure out what your goals are and work backwards from there, right? So if your goal is financial freedom, then you need to be working backwards from that, right? And if your goal is to get a certain net worth, you need to be working backwards, right? If I'm saying I want to be financially free by, age 28, then I need to figure out how many rental units do I need to cash flow at this amount. So is that typically whenever you're talking to people in that kind of, sense, and you're telling them about, they're starting their investment journey, is that how do you recommend people, kind of begin doing that? Because I know if I was to, approach stocks in the same way of, hey, I want financial freedom through stocks, I would say, okay, I need to get some dividend stocks. I know if I want, increase my net worth, I need to be getting those long-term holds to get that appreciation. So is that kind of similar, or how would you approach someone in that regard when they're investing to, actually set goals and figure out what you want to do as far as the plan?
No, so you hit the nail on the head. I do the same thing. So it's funny you mentioned that. So for those who may not know, I do have a YouTube channel, and I did a video on how to calculate your retirement number. So I walk you through the math of you walk through the numbers of this would be my potential expenses. This is the money I would want to spend, this and that. We go through an inflation calculator, excuse me. And at the end, we end up with like, all right, you need $3 million in order to take a salary of 150K for the next 25 years, because I use the 4% rule. For those who may not know, the 4% rule means that you have a net worth where you can safely withdraw 4% per year, and that will provide you with a salary so you can live, and basically you never run out of money. So I walk people through that. I have a whole video, and that's basically what I do with the stock market. I say, hey, look, all right, why are you investing? Why do you want to invest? Is it for, like you said, financial freedom? Is it your kids' college? What's your time horizon? How long are you looking to be in the market? And we go through all of that. And then, of course, we try to work it way backwards. So, all right, how much do you want? Now, what I do want to add is the difference with the stock market is this. You have to think about asset allocation. So the bigger your portfolio gets, you need to start diversifying. Yeah. So once you get to like $1 million in the stock market, you don't want to necessarily be like 100% equities. Because if you take, let's just say, for instance, coronavirus, 30% dip, bro, you now down to $700, or, you take a big hit. That's a lot of money. So you want to start to diversify, maybe put some of them assets into bonds, commodities, something like that, gold. That's, gold been on a tear lately. So, that would be the added on piece that I usually typically, talk to people about. So first we try to figure out, okay, what is that big number? Okay. How are we going to get you there? So that's basically figuring out how much you need to invest a month, how long you need to invest. And ultimately the end goal is, preservation of wealth. So how are we going to now preserve that wealth? Because you don't want to necessarily all equities when we, once you amass this amount, you need to start looking into real estate, start looking into, other asset classes to diversify. So that's kind of the roadmap that I would give people when starting their investment journey.
Yeah.
Yep. And I think, just correct me if I'm wrong, but this is like the definition of FIRE, right? Financial independence, retire early. First, you're identifying your FIRE number, that's your goal in number. And then I'm sure you mentioned all of this like in the video you're talking about, like in your YouTube video. You probably go more in depth. But pretty much what that is just a plan for success. Like you need to always start with the end in mind. That way you can have actionable steps in order to get there. And then once you know what number you're targeting, that way you can be more strategic about everything that you're doing in order to meet it by a certain deadline. Whenever that deadline is, whether it's 5, 10, 15, or 20 years, however many years away, you can be very strategic about how you get there. And I think the stock market is good for that, especially if you start implementing different strategies, especially like I know dollar cost averaging, for instance, is like one strategy I've heard about several times. I don't know if you can go into that, like describe what that is. That's just like a consistent strategy.
We can, so I can definitely go in depth because I use it. So I am a dollar cost average investor, especially when it comes to our long-term portfolio. So let me take a step back. What is dollar cost average? I'm going to explain it just simple. So dollar cost average means you invest in maybe a stock or ETF.
Can you explain real quick also what an ETF and all of that is too for people?
Yeah, okay. All right. So starting with dollar cost average, right? So you invest in a stock or ETF every month, and you pick the same day, whether it's the 1st, the 15th, or the end of the month. But every month, maybe it's $250 you invest into, say, Apple, and you do that every month. That's basically dollar cost averaging, because at the end of the day, every month you're going to buy it at a different price, and ultimately at the end of the year, the price will average out. That'll be your cost basis, which means like your average cost, and therefore, over time, you want to the goal with that is to accumulate a long amount of shares and then just sit on it. Mm-hmm. All right. So that's dollar cost averaging. Now, ETF, right? So ETF, exchange traded fund. Now, what that is, picture it's like an index, or it can be a sector. So you can have like technology, healthcare companies, what else? Industry companies, material companies, whatever industry is out of a sector, right? So these funds are like index funds, where they're a collection of stocks into a fund. But now the difference with an ETF is it trades on the stock market like a stock. Most indexes, you have to have like a minimum amount to purchase into them, and you only can buy or execute at the end of the day once the price is settled. So now with ETFs, it's a little bit different. They trade like stocks, but it's basically a collection of stocks that you're trading, which is pretty dope. Like, and it's fairly new to the stock market. I'm not sure when they were established, but I know they're fairly new financial instruments. And so I think, did I answer all the questions? ETF.
And that was really, I really wanted to.
Did I answer everything?
Yeah, you did.
Yeah, now I want to comment on just that strategy, because it removes a lot of emotions out of it. That's like one of the things I want to target on there, is because the stock market is a very emotional roller coaster. I know that we've all seen that, especially, I know we have like group messages and stuff where we talk about this daily. So we see how you have super highs and super lows. But if you are investing on the first of the month, regardless of where the market is, you remove the emotion equation out of it. And I don't know, you can like be a testament to how important that is.
So that's where I think I kind of got off track. So we was talking about the dollar cost average, but I wanted to explain the ETF. So with the dollar cost average, like you said, it removes the emotion from it, and it makes investing simple. Like, you just like, all right, every month my money goes into this account, I'm gonna buy this, and it is what it is. Now, like you said, for people who are new to the stock market, don't look at it every day. Like, that's one. Please don't. Seriously, because you have to look at it with a long-term outlook. Like, you got to be thinking 5 to 10 years. Seriously, like, you're putting this money away for 5 to 10 years when you are long-term investing. So if you watch every day, you're going to get caught up in the short-term stuff, and then you end up missing out on the longer-term gains, because the long-term trends are going to stick. You know what I mean? So I wanted to get into, so to explain the dollar cost average or get into how I do it, here's a tip how you can kind of make it a little bit better. I will say that I dollar cost average, but I do try to time the market a little bit in that I will each month there's going to be a down day, a red day. I choose to go shopping on that day. Whereas some people would say, all right, on the first, I'm going to always buy. And you might, you know what I'm saying? You might have could have got it cheaper that month if you just waited. Now, some people don't have the patience or the discipline for that. And if you don't, just be a disciplined investor, stick with, the first, make it automated. Because if you don't want to be involved, like you say, you're too emotional, then fine. But for those who can handle their emotions, I don't feel like there's nothing wrong with getting the best deals. And so therefore, like I know that I'm a dollar cost average investor. So every month I just have money on the sidelines and I say, all right, when I see a good price for this month, I'm going to buy. Now, just here's a gem. Thursdays typically be the worst days in the stock market. Like if you go back and look, almost every Thursday, it's like a red day. It's very so often do we get a green day on a Thursday. So typically I do my shopping on a Thursday.
Mm-hmm. And I think that's just that whole basis of what you just said is a really good foundation of where a lot of people could really just start, right? Dollar cost averaging with an ETF and, buying on those low days, right? Because there's always going to be low days. So if you literally, go to your brokerage or get you on an app and you literally start off investing that way, that's a great, $200 a month. Every, whatever day of the month, $300, whatever, something every month that you're putting in there no matter what. Because the dollar cost averaging is going to let you buy a lot of shares when it's low, and, it will help you, spread that risk out too, just because of the fact that you're in that ETF. So you could, be buying in a real estate or tech or whatever the case may be.
So I would tell them, and here, look, and for those who want to get started and get to what you said, Alex, do VTI. That's the symbol ticker, VTI. That's the Vanguard Total Stock Market Index. That means when you buy that ETF, you are buying literally every stock in the stock market. You're getting the total stock market. So every stock so if the market goes up, your money goes up. When the market goes down, your money goes down. But that's like a great way for somebody that's new, low risk, you know what I'm saying? Great starter because and I feel like it's just a good way to ease people in. So I would throw that in there too.
How much does that trade at usually?
Let me pull it up. Let's see. I want to say it's like up to 160, 170, but I'm not 100%.
It's like 169.
169. Yep, 169.09.
So you could buy, two shares.
Go ahead.
Or no, go ahead. You got it.
No, I was just gonna say, take what you said, the 200. You only got to do 200. So every month you just buy one share of this. The VTI is one. So that costs you less than 200 a month right now. And if you do that for a year, let's see where your money would be. And then if you add in what we talked about, you buy it on the down days. Let's see where it happens in the next 12 months. You'll be happy.
Yeah, and that's really the basis of what stock investing really is in my eyes.
Right.
It's literally just that. You just buying it. Look, the thing is, what most people do is, because of course we always hear the saying, right? You're supposed to buy low and sell high, but most people always buy high and sell low.
That's trading. What people have to understand is that is trading. When people say buy low, sell high, that is in reference to trading. And so you're right. I think people get caught up on that. And they see a little bit of money, and then when they go down in the short term, they be like, no, like I should have sold. But it's like, no, man, long-term invest first. Like, trust me, it's going to bounce back like 5 to 10 years, and we should be saying buy and hold, not buy low, sell high. We should be saying buy and hold.
Yeah, definitely. And so isn't that, okay, so let's kind of touch on that a little bit too, because I know we're getting into that's a whole nother strategy in itself, right? Because of course with, the buy low, sell high, or if you do it the wrong way and you buy high and
buy high, sell low.
Then a lot of people are victims of that.
Yeah. Hey, I was a victim of it too.
Hey, I done took my lumps too, man. We all been
It happens. I swear, I'm not even gonna get into it, but I swear sometimes I literally buy on the day it is the highest, and then I literally every day after it drops. I swear, but I'm not.
This dude be coming to me the next day like, bro, I'm done. You did it again.
Bro, like look at the chart. Guess what day I bought this on? It'd be the highest day. But anyway, so But yeah, with the trading though, so I know with trading, of course, there's like, they have people, there are scalpers, they have people that day trade, they have swing trading, and then position trading, which is more so what we've been talking about, which is that long term kind of thing, right? So can you kind of talk about the differences between those in terms of like, because I know some people have heard about day trading and that, and they might be interested in potentially doing that as form of
So all right, so I'll try to go through the four styles you mentioned. So I'm gonna start with scalpers because I'm not too well versed with scalpers. I think scalpers are like in and out. That's how I look at them. They like play on very short term or short time frames. Like they're trading like 10, 15, 30-minute intervals, and they're just, they riding quick bursts of momentums or downsides, and they just basically scalping. And so they do that all day. So they're taking multiple trades a day. Then you have your day traders, which is they may be in a trade like for that day. So scalpers are like a couple minutes, where the day trader like, all right, I get in the morning, I might ride this to the evening, and I'm out, something like that, right? So they trade, they're usually in and out. They don't hold positions overnight. They're usually in and out, and they're looking to make, the average day trader who's successful will tell you if they make 3 to 5% on a day trade, they happy. On trading stocks. Now, if we talking about options, I know we said we ain't gonna get into that, but that's a whole nother world. But I just want to just put that out there. So I want to put that disclaimer. So if you're doing stocks, 3 to 5% is a good return. So that's scalpers and day traders. Then you have swing traders. Now, swing traders are people who basically are going to take out a position and will hold it anywhere from 2 days to a few months. Basically what they're doing is they're trading a trend. Maybe they have identified a stock. They see it trades a certain trend that, hey, when it hits these lows, it usually rises to these highs. When it hits these highs, it usually rises low. So you can swing trade either way, high to low, low to high. It just depends on what's your style, what's your strategy, what you like. Then you have positional trader, which I am now transitioning to and believe what the future is and what we need to really be pushing. Position trading is honestly, position trading is like trading like the big boys. Real talk, because you're taking out 1, 2, 3 year positions on a stock or industry with the knowledge that, okay, in 1 to 2, 3 years, I think this stock could potentially double, triple. That's how the big boys play. And they think long term. Like they're not worried about the short term fluctuations. They're thinking 2 years out. Like when they buy something, they're thinking, I'm not touching this until 2 years later anyway. You know what I mean? And they look on bigger time frames. They trade on bigger trends. So they know that September and October historically are bad months. So what do you think these professionals have been doing? They made a lot of money this summer. They just took a lot of it when we had this correction. And best believe once we get towards the end of September and October, they're going to come back and buy it in, and they're going to take the market back up. Yeah. And, that's how the big boys play. So those are the styles of trading. And kind of like a little history on them.
Yeah, and I'm glad you went through all four of them, because what you see is that there's different strategies based off of, one, your end goal, and then two, I think it's like your investment level within, like wanting to be intertwined within the business, within the stock investment game altogether. Because you have a scalper who's literally going to be watching the market all day to watch indicators to say, okay, it's time to get in, time to get out. Then you have the position trader who's buying it because he knows that it's at a certain point, and then says, all right, I'm about to go do something else for the next 2 years, and I come back later. So
I'll come back in 2 years.
Right. But it's all about your strategy and what your end goal is, I think. So I think it's really like the main thing that I took away from that. It's like, if you have a long-term outlook, you can be a position that should pretty much identify you to where you want to be, like which one of those four categories you want to be in.
And what I would add to that is that I know a lot of people always say they have interest in trading, but they don't want to watch the stock market all day. Like being a swing trader or position trader is like perfect for you because you don't have to. But what you do have to do is your research and figure out, okay, when is it a good time to buy this, to stake my position. And then when you get it, you execute, and then you just stick to the plan. And in 2 years you come back, and hopefully, and I won't say you come back in 2 years. I mean, you should definitely check on your investment quarterly. Make sure it's okay, make sure everything's tracking well, but you're not going to panic off of anything short term. You're thinking 2 years out. And so for people who have jobs or like, hey, listen, I don't have the time, like think about trading on longer term on time frames.
Mm-hmm. And I think that's a great way too, to be able to, if you know yourself, you can not necessarily be so emotionally involved, because if you're more emotional like me, then you might necessarily not be good with being a day trader or scalping or all of those things, because it's going to take a toll on you. So
It does. That day trading life is serious, man. I did it, and I'll say I dabble in it. It's definitely, it gives you that good, quick high, but it's a dangerous game, man. It's a zero sum game, because you're gonna have good days and then you're gonna give it right back.
Yeah.
You can't predict the market, and so it's just better to
long term.
Yeah, long term. Like, you know what I'm saying? That's why I think a lot of people get scared out of the market, is because they entered it without the right mindset, the right education, the right strategy. But we gonna change that, man. Having conversations like this, talking, doing what we doing, we gonna change.
So a comparison I was seeing between real estate and stocks is that, like, they all have their different types of investors. Like, you have the buy and hold investor for real estate. They're looking long term. They're looking for some investment they can get into that has passive cash flow coming in monthly. Then you have a flipper who's looking at like maybe a 2 to 3 month, maybe a 6 month flip. That's going to be your swing traders. And then you have the scalpers and day traders, who are the wholesalers in real estate.
Right.
But it's like very synonymous. Like, you can see that there's different strategies based off of your desired end goals as an investor for real estate or with stocks.
That analogy was perfect. Real talk.
So then, I know, because we kind of talked about the ETF. So as far as like the individual stocks, then when we talk about just those equities, what would you say are some of like the best long-term individual stocks to be investing in? Just because we're talking on a long-term basis.
So long-term, right? When we think of long-term, I'm gonna start with, you want to invest in the best companies, quality, right?
Yeah.
Quality. That's where we got to start with. I know when a lot of people are new to the stock market, they want to go cheap because they don't got a lot of money, and they thinking, okay, I put my money in, I can get a quick hit. That's that wrong mindset we was just talking about, right? That's the wrong way you want to get in. If you only got a little bit of money to really play with, why not invest in the best, right? So at least hey, if anything, if I put it in here, the worst that can happen is this best company got to go to shit. Excuse my language. But you know what I'm saying? So you got to have that mindset, right? So let's talk about what are the best companies in the world. Apple, Microsoft, Google, Facebook,
Amazon.
I'm about to say that.
Yeah.
So
Amazon's so expensive.
I was going to say that exact thing. I'm like, all right, so I got $200. I want to go check out Amazon. How does that work?
Let's add this in for the people. Let's not forget, a lot of apps and even now brokerages are offering fractional shares.
Mm-hmm.
I think that's really big that we should put out there. Let's not be intimidated that these stocks are expensive, because I keep telling myself that, and I have a Charles Schwab account and they offer fractional shares, and I keep saying, damn, I need to buy some Amazon, but I'm like, yo, Amazon is $3,000, like off top.
And they already split.
Can you define that too?
No, they never split.
They split I thought they split in the 90s.
Amazon never split. No.
I thought it was like 20. It was before I was alive, but
Nah. I don't think Amazon ever did it. I don't think they ever did a stock split. Bezos ain't having that. Yeah, he's like, you just gonna have to pay up.
How does a fractional share work then, for people who may not know?
Okay, so the fractional shares, for anybody that ever bought crypto, it's the same way. Like if anybody ever bought Bitcoin, you could buy how you used to buy the little 0.0 shares of the Bitcoin. Fractional shares work the same way. If you got $100, you can buy $100 worth of one Amazon share. So it'd be like 0.000 whatever of a fractional share. I mean, so let's think about this. There were some people who had fractional shares of Tesla, and when Tesla split, those fractional shares turned into whole shares. So that's the power of fractional shares. Like, that's why you shouldn't be intimidated by these big companies, because look what happened. There were people who I don't got the whole $2,000 to put in Tesla. They put in what they could, and when it split, they end up now, instead of having just a fractional, they got like 2-3 shares.
Yeah.
Right. Okay, I know you mentioned stock splits a couple of times already. So, what is the benefit of that? Because I know people, that was like the big topic of conversation with Apple and with Tesla, about like, oh, they're splitting, like you should be getting in. Should you be getting in, or like, what is the benefit of that for the average investor?
So the benefit for the average investor is that it lowers the entry price for you to be able to own the stock. Now, as far as what is the value, there is none. It's like literally 4 quarters for $1. Like I got a dollar bill, but I'm gonna just say, all right, here's 4 quarters, and it's still the same value. Now, what happened with Apple and Tesla is when they announced these splits, like it just caused the mania. So the prices, they drove up. So when Apple announced the split, it was at like $400. Well, by the time it actually split, it was 500. So basically, you had to think about it. Apple ran up an extra $100. It was still only worth 400, but it ran up a whole extra 100. So then it split, and it was like 125. Now, for people who are new, this Apple split is still a big opportunity, right? So anybody who bought Apple at the split and it's down right now, you are fine. Okay, you're fine. Don't panic. Don't trip. Now, Apple may come down to about 90, 95, somewhere around there. If it does, buy more. If you bought it at 125 and it's under 100, why would you not? Why? That's one of the things we got to talk about is why when you buy something high and it's lower, you panic and sell it. Like if you bought it up high, why not just buy it lower again? And when it goes back up to where it was, you at least break it even because you bought it low and then you recoup the money that you was originally down. Mm-hmm. So it's like if you liked it up there and it's down here, I don't understand the panic and why you just wouldn't buy it again. But I do understand the panic, the media and all of that stuff. You get caught up in your emotions and all of that. And that's why, like y'all keep saying, you got to keep your emotions out of it. You have to make it numbers. You have to make it about the numbers. And you just got to keep telling yourself it's about the numbers and it's about the long term.
I love that. And I would say the only way you'd be wrong is if you bought the 918 option contract like me with Apple. That'd be the only way you messed up, because I lost a good chunk off that contract.
but here's the thing: was you up at one point in time?
I was never, because I bought it at the high. I was never. I bought it 2 weeks ago when it was right at the high.
Yeah, you bought it on the second or the third?
It was the second. No, it was the third. It was the third. I bought on the third and then went down right after.
Yeah, so if you bought it September 3rd, it's been on a decline ever since then.
Exactly.
High, still low. That's his motto.
But look, Alex, see, here's what you do, right? You got to trade through it, right? So you need to be looking at a longer term contract,
yeah,
and doubling up, because we know Apple gonna go back up. So get a long. So now that it's low, go look at the 2023 contracts, buy that and hold that, and you hold that for 2 years and see what happens.
Nah, fact. The problem is I averaged down on another 918.
Oh my god! No.
But I get you though, for sure. That's why I think. But that's the thing about these long-term companies. Like you cannot go wrong because you're buying it so far out that it's like, dude, look at the trend. The last 2 years it's been going up. It's probably gonna do this. Like Apple's not gonna go to shit. It's not going.
It's not going to happen. It's going to go down because it has to do what's called a gap fill, and once it does that, everything will be copacetic.
Yeah. No, for sure.
One of my favorite quotes that I always hear is that the stock market is the only place where people run away from a sale. Because I know if somebody sees some Jordans that were priced at 200 drop to 120, this is gonna be a line out the door. And so, soon as stock goes down, everybody's running. Everybody's like, this time
that's where we gotta come in, and that's where, like, if anybody who follows me on Instagram think, yo, like my stories, I make it like that. Like I try to make it fun because it's like I want to portray it the same way. Like, it's like, yo, like, matter of fact, on Friday, I was like, yo, Apple is $106. If you got $106 right now, go buy it. Like, that is a good price. That's cheap. You know what I'm saying? Like, and if it goes down, and some people was like, well, it might go down more. All right, well, it's just 95, 90. I'm pretty sure you can pull out another $100 and you buy another one. But people be scared to pull the trigger, and then you go. Let's say it's at 106, then they like, oh, it's at 95. They're like, oh, it's gonna go to 80. Then it goes back up to 106. Now it's gonna go back to 90, and then it's at 120. You done missed your chance because you thinking it's gonna keep going lower and lower. Like, no, when it hits a price point that is attractive to you, buy it. It's as simple as that.
Yeah, and that's that's the thing about those companies. You can't. That's a good thing about those good companies is you can't go. You're buying a good company on sale.
Right.
You can't go wrong. And you know what's interesting too? Whenever I was doing some research earlier, just in preparation for this, I saw some interesting facts just in regard to like what certain investments will be worth today, right? So even in, because we all love to see this 2020 hindsight, right? They say if you invested $1,000 in Apple in 2003, that was like at one of its low points, it will be worth $226,000 today.
Now, hold on. Say that again, though. How much was that investment?
$1,000 in Apple in 2003 will be worth $226,000 today.
Dog, that's 17 years, and your money went from now think about it. If we put in 1,000 right now, 2020, when we get to 2035, approximately that 1,000 could be 200 grand. You tell them. And that's if you put 1,000 in Apple right now. Let's say history repeats itself. That's why people are like, "Yo, this is a good opportunity."
Yeah. And I saw. You think that one's crazy? Amazon too. I mean, 1997. That was when they IPO'd. That's a little harder to catch, of course, off IPO. But $1,000 in 97 will be worth $1.2 million today. And then Netflix.
What did you do? Tesla?
No, I did Apple, Amazon, Netflix, and Facebook.
Oh, I'm glad you did Facebook. I was gonna see if you did Facebook. Go ahead.
Yeah, so
Netflix.
Netflix, $1,000 in 2007 will be $110,000 today. And by the way, too, you could even just divide this by 10, and it'll be you did $100, and ittle be the same thing. So $100 is on.
That's good.
In 97.
That puts it in perspective for somebody who don't have 1,000. They'd be like, "Oh, I got 100." Well, because somebody gonna immediately dismiss this and be like, "Oh, I ain't have 1,000 anyway." Would you have 100? It'd been the same thing.
Yeah. So you did $100 in Amazon in 97, then that would be $120,000 today. So that's what 23 years in that time span. And then Facebook, which IPO'd pretty late. I mean, in 2012. So that was $1,000 in Facebook in 2012 will be worth $4,900 today. Now, that's not like one of those amazing things that we hear about, but wait 20 years and see.
Right. That's what I was about to say. You said when it IPO?
2012.
Exactly. They just only got 8 years. Amazon had 97. Apple 2003.
Right.
Yeah.
You know what I mean? Like they got hella runways on Facebook.
And I checked this one out though. This was super interesting though. So this is my favorite perspective, right? So if let's say you look at Coca-Cola, right? Coca-Cola IPO'd 1886. So let's say you had a great-grandfather or great-grandmother buy one share of Coca-Cola.
Yes. I know where you about to go. It's about to be amazing, y'all. Listen to it. Listen to what's about to happen right now.
If they bought one share, which was $40 when they IPO'd in 1886, one share would have turned into $9,200 shares after the splits. And that will be worth $486,000 today and would pay you $14,000 per year in dividends.
Yes.
That's crazy.
Crazy.
That
$40.
$40 turned into $486,000 because that. How
much was the dividend?
$14,000 a year.
With a salary of $14,000 a year.
And that's $40. If you did 1,000.
Oh Lord.
If you did 1,000, if your grandparents had $1,000, great grandparents put 1,000, you would be sitting easily on tens of millions and getting paid 6 figures just from Coca-Cola because you bought Coca-Cola early. Now, of course, that's like, we talking 2020
world.
Yes. But the thing is, go ahead.
No, go ahead. I think you're about to say it.
No, I wasn't going to talk about something else, but go ahead.
No, I was just going to say, but people say 2020 is, 2020 hindsight. But that's not the case because
that's
today,
true.
You got to say, all right, I'm turning today into 2050. So when you look back at 2050, you like, I had my 30-year span where it's like if you invested $1,000 in 2020, it would have been, how much money we talking? Like millions of dollars. Like this is your opportunity to do that.
Yep.
And I don't want people to think it's too late.
Exactly. That is a great perspective. That is that is what I was kind of leaning towards. But I was going because I was looking at, okay, if this is what happened with these companies that IPO, okay, what companies are about to IPO now? Now, I'm not saying you got to catch anyone on an IPO and do that, but looking at it, you have Airbnb about an IPO, DoorDash and Instacart are about an IPO. Now, just looking where things are going, Airbnb is a really good looking company just in the regards of what their business model is. They don't own any real estate, right? Just like Uber and Lyft don't do any of that, right? So in 20 years or in 30 years, they're going to be people saying the same thing I said about whatever these companies that might be saying it about companies that are IPOing now, or even these really good solid companies that are already established. That's a good thing about buying these good companies on a discount. You don't have to catch an IPO. You're already buying them super cheap, and they're already good established companies. So now, 30 years from now, you're going to be sitting on good money.
Exactly. That's it. That's the game. Look, that's the game right there, man. We gave them everything they need.
I ain't got nowhere else to say. Honestly.
Like listen, if anybody want to get in the stock market, we gave you everything. How to go sign up for a brokerage, what to invest, how to invest, how to control your emotions, what strategies. We taught, like, that's the blueprint. Buy and hold. People want to know how people get wealthy in the stock market and how the game's played. We literally just gave everything away.
100%. That's all I got, bro.
Same with me. I just wrapping it up. Like, it's all about perspective, though, because back in 1886, it felt like 2020. Like, I say that to say, back then they like, oh man, we missed some. A lot of people were saying we missed all the good deals, but somebody was saying, hey, get Coke. I just need one share. Somebody said it. I guarantee you. Back when it IPO. Same thing in 1997 with Amazon, 1996, 2003 with Apple. Somebody was back then saying all the good deals are gone. I miss Coca-Cola. Well, somebody else was saying, hey, check out Amazon. No, yeah, check out Amazon. Check out Apple. And then 20 years later, you looking like, oh man, that was a good deal.
Here's a gem. So in the sharing economy world, so Alex mentioned Airbnb. Think about Uber. They just IPO'd.
When did they IPO? Last year?
Like last year.
Yeah.
And look at, that's an opportunity right there. Where could Uber be in 20 years, 30 years?
And
it's dumb cheap right now.
Exactly.
It's $30. So according to your, one share, let's come back and maybe our grandkids, somebody will say, dang, grandpa said back then about one share of Uber, it could be buku money now in 30, 40 years. Because
those certain things just become, when something becomes like a household item, it's like, a household name, that's like, oh my God, you sitting on millions of dollars, you bought it early. Uber is on pace to become that kind of household. They already are now, but what's going to happen in 30 years? Airbnb, that's what's happening. That's where things are moving to. So when you're able to see how things are going and you get ahead of it, that's how people, they say, oh man, you got lucky. No, I just was able to kind of foresee what was happening just based off of being aware of what's going on.
What's going on around me.
Take advantage of the opportunity when it's there. So,
but those was really all my questions that I really wanted to get into all the bases. So I guess we can kind of wrap it up with the Fast Five now.
Let's do it.
So, now, I don't know if he did it with him the first time.
Fast Five the first time.
He didn't. We didn't have it back then. That was.
We were a little newer to guess. Like you were one of the first few we had, so it was
okay.
Yeah. So that's pretty much where we asked 5 questions. We're gonna do it different. So from now we're gonna keep it. We've been experimenting. We're gonna do 5 questions, 10 seconds each. Every question. So I'm gonna take the first one. Marlon gonna take the next one, and then we're gonna kind of alternate. So first question is, what does success mean to you?
Success means to me making my wife happy, making my family happy. My family happy. That's success to me.
Yeah. All right. Question number 2. What's your favorite money or business book?
Ooh. Okay. I'm gonna go with The Bogglehead Guide to Invest in 2nd edition.
Got you. Okay. I ain't never heard of it, but
who's that by?
So I don't know who the authors are because it's like 3 of them, but it's based off of John Bogle, who was like Warren Buffett's like mentor, this is the guy who created index funds and stuff. So it's just like a great book for beginners who really want to just learn about like what is investing. So I always recommend that book because it was just a great book.
Third question. So would you rather have $1 million today or $1,000 a week for life, and why?
I would go with $1,000 a week because I can invest that $1,000 every week, and eventually that'll grow into more money than that $1 million that they gave me.
Okay. All right. Question number 4. If you could go back and change anything about your journey, what would it be?
That I follow people's advice sooner. I had a lot of like warnings, and I'm gonna be honest, you know, I was a little bit hard-headed, and I chose to do things on my own. Now granted, you know, I'd listen to those lessons and had them in the back of my mind, so when I messed up, it's like, damn, they told me. But yeah, I just wish that if I could go back and change anything in my journey, it would just be like just listening to people's advice that they gave me of, you know what I'm saying, save early, you know, make sure you live on a budget, things like that.
Yeah, for sure. I love it. I would have bought Amazon in 1997.
When he was 1 year old.
Yeah. No, but we could still buy it now.
Yeah, I'm thinking about that, man. If I'd have been investing my refund checks, let me add that in.
Oh, for sure. So last question, then, where can people find out more about you?
Yeah, so they can catch me at First Gen Wealth Building. That's my IG, and Twitter is First Gen Wealth. I got a YouTube page that's First Generation Wealth Building. And then, you know, the journey with my wife, we still got that one going. So that's at Debt Free and Fitness. We've just been transitioning with that brand a little bit, so that way I can angle off. But yeah, if you want to reach out to me, that's where you can find me. That's where you can contact me, send me a DM, tweet me, whatever. I always respond to any DMs and stuff like that. And yeah, that's where you can find me, man.
For sure. All right. Well, yeah, this was dope, man. This was super fun. I'm glad we got you on here. This was, I think, a great episode for people to get the fundamentals of stock investing, because I know a lot of people have been asking us to do an episode. I was like, all right, chill. We're going to bring somebody. We need to bring somebody. We didn't want to really just do it on our own. Not that, you know, we could have, but I mean, it is better to bring an outside perspective, someone that's actively doing it. And I know that's doing it well. And it's putting the information and has the knowledge, because I know I even just be, you know, just based on the conversation we had, you was studying this for a long. You put a lot of effort into studying this stuff. So I know, you know what you're talking about, and you know what you're doing. So we definitely appreciate
that. No, I appreciate y'all, man. As always, I always love coming on y'all platform, man. It's an amazing platform what y'all doing. Anytime, man. Listen, when y'all have y'all 100th episode, like y'all gotta do like something super dope and special, but you know what I'm saying? I'm trying to come through.
Yeah, for sure. We're gonna do something.
First repeat guest. I loved it though. It was good.
Yeah. Man, that was a great episode. I really thoroughly enjoyed that one, man. That was definitely one of my favorites. But yes, anyways, y'all definitely gonna make sure to check out that course, the real estate course I talked about in the intro. Still on sale, so y'all definitely go cop that. And we, like I said, providing a ton of value in that course. So be sure to go check it out. But anyways, yes, that's it for this episode of the Money Monopolizers podcast. New episodes will be released every Thursday and will be available on Apple Podcasts, Spotify, and YouTube. Just search Money Monopolizers wherever you listen to podcasts. We hope you learned something of value today. If you did, we'd appreciate it if you rated us 5 stars and left us a review on Apple Podcasts. You can find out more info about us on Twitter at The Monopolizers or on Instagram at Money Monopolizers. We post informative content on there that'll keep you engaged, so be sure to check that out and share it on posts. But until then, we out here. Go get the course.
You've been listening to the Money Monopolizers podcast, helping you take control of your financial destiny. To learn more about how you can be in control of your money, visit moneymonopolizers.com. We'll catch you next time when Alex and Marlon share more personal finance and wealth creation tips with you. Now it's time to take action.